Today we have Chris Versace, CIO of Tematica Research with us. Chris, it's so nice to have you on the show.
Well, thanks for having me.
Now, you came all the way from DC, so perhaps you have some inside scoop about what's going on down there. But as far as the markets go, they've plowed through some usually tumultuous months.
Right.
And just like the tax bill. And now the two meet in December. So
correct.
How are the markets reacting?
Well, you know, it's like we were talking before we started recording, that if we were to dial this back a couple of weeks ago, the market was kind of at a push-pull. You know, we had the House bill coming due for tax reform, the Senate bill, will they match, will they get passed even? So a lot of uncertainty. You remember too that really coming into this just a couple days ago, the Senate bill got pushed off, there wasn't a vote. What's going on? Flash forward, here we are, both bills are passed, and I think the tone of the market has gone from will we get tax reform to, oh, it looks like we're going to get tax reform, which companies are actually poised to benefit from that? And I think that's where we are.
Okay, now let's just start with this week. On the news, the market tried to rally and it failed twice. So people, to buy the dips, they're losing money. So what kind of strategy should we be following right now?
Well, I think there's a couple things. I think one, if you look at the degree of investor enthusiasm, it has been extremely high. You mentioned September, October, even November being strong performers, even though September, October tend to be rocky months.
Yeah.
At the same time, the indices have created to move higher and higher. You've had more people putting more money to work into the market. So cash balances on the side are, you know, near record lows. So a little disconcerting if we do get some jigginess in the market, as we like to say, right?
Right.
Right. So the question is, you know, where are we heading now? And I think the issue is that we don't have a lot of cash on the sidelines, like I said. People are starting to go, okay, who's going to benefit, who's not? From our perspective at Tematica, we look at the world thematically. What does that mean? So we try to look at the shifting landscapes of economics, demographics, psychographics, technology, and some other things to identify demonstrative tailwinds that are pushing on businesses. Okay. So great example, coming out of the holiday shopping season from Thanksgiving to Cyber Monday, very clear that consumers are shopping increasingly online and even more so on mobile. So when we look at that, that's another positive set of data points for our connected society investing theme. Of course, Amazon's the poster child, but do you know who the sleeper play on Amazon is?
Who?
UPS.
Oh.
United Parcel Service. Because think about it, you're buying stuff online, one way or another, it has to get shipped to you or the person you are sending it to, and more often than not, that means UPS. So we try to connect these dots as well, rather than just look at the initial beneficiary. We try to look at the second or third derivative as well.
Wow, interesting stuff. So what stocks do you like now?
Well, it's an interesting question because, as you pointed out, you know, the market's been a little rocky of late. We've seen tech get hit pretty hard. So even though we've seen pullback in companies like Universal Display, Applied Materials, even Amazon a little bit, we always go back to our tailwinds. Are they still blowing as hard? Are they maybe slowing down or not? And from what we see, whether it's, you know, again, Amazon, Applied Materials, UPS even, Universal Display that's benefiting from the ramp in organic light emitting diodes, iPhone X, as well as TVs come Consumer Electronics Show in January, we see favorable fundamental data points for these businesses. So for stocks like that have pulled back, you know, it could be a second bite at the apple for these names that have really run thus far this year.
And so you like to look at stock specific, not necessarily just sectors, correct?
We don't believe in sector investing. Oh. We actually think sector investing is dead. When we look through our themes, we look horizontally to try to capture the best positioned company relative to the theme. You know, the problem with sector investing is if, like when I was an equity analyst, you know, back in 1999, right, nobody cared about industrials or rust companies because it was all about internet and eyeballs. But there were things happening in those categories, those industries, so to speak. So we kind of slice it very differently.
All right, well, coming back to the 2000s, do you see a crash could be imminent right now? Is it possible? A
crash? No, I don't think so. Well, let's define what these are. Right?
Sure.
So a correction is a pullback of 10% or more. Correction 10% or more. A pullback is, 3 to 6%. And, we've seen the last couple of days, the market move, 100 points lower here, 100 points lower there. I do think that the market is priced to perfection, meaning everything has to go right to continue to move higher. And I think that the next tipping point is going to be, just to bring the conversation full circle, is do we get what we are expecting with tax reform, and is there the flow through that is expected? If there's a hiccup to that, okay, not a lot of money on the sidelines, people might get a little nervous. I give that a low probability.
Okay, but what about the economic backdrop? That has been strengthening recently. Could that be the saving grace to help this market rally?
Well, I think the data is probably showing up a little better than expected, which is, don't get me wrong, always good to see, but we are very long in the current expansion. And we have to remember we have a Fed that's more likely to raise rates than not, and they're also dialing back their balance sheet, which is something we haven't really seen before. So I think there is some unknowns about the speed of the economy. Having said that, this late in the cycle, is it likely to accelerate from 2–2.5% on a sustained basis, GDP? Probably not, but we'll see.
So are you expecting a rate hike in December?
I would think I and everybody else is expecting a rate hike in December.
It's at 92%, I believe.
Yeah. I mean, the more recent data we've gotten, unless the NFP on Friday totally, falls out of bed, I think it's a foregone conclusion.
All right. So then, what will the outlook be for FinBiz in 2018 if we get this milestone in the Trump administration with tax and a rate hike?
Well, again, we don't buy the market, so I can't really say I think the market will be up 10% or 5% or whatever that is. I do know, just not to be beating the same drum, longer in the tooth. I do think that if we get tax reform, we might see modest multiple expansion or support for an S&P that's around 20–21 times forward earnings. Okay. The real question, though, is will the S&P earnings grow 10% next year? That's one of the stronger forecasts that we've seen. We'll have to break that down for the impact of tax reform and see what the operating earnings are in terms of improving. But, TBD.
Okay. Do you have a quick bet on that?
I do not.
Okay. Well, then you know what? Let's finish with a coin toss. And I'm talking about digital coins. Do you see Bitcoin as parabolic to the upside?
Anytime something new comes out like this, the pendulum often swings hard and overswings, if you will, right? I remember back in like 2000, everybody was talking about 3G being here, and it took several years for 3G to show up. A lot of expectation, and that balloon kind of was a slow leak, and disappointment ensued. So, do I think that's going to happen with Bitcoin? I think it certainly could, but I also think though that we're still relatively early in the innings for Bitcoin. So if we're in inning 2, maybe 3, there's a long way to go with Bitcoin and blockchain and the disruptive effects that it could have. And from our thematic perspective, again, these changing landscapes, it will be something we're paying attention to.
All right, awesome. Well, Chris, thank you so much for dropping in from
Happy
DC.
to do it. Sure
so
thing.
Nice to have you on Wall Street.
Yes, it is. Thank you.